Hello, chart watchers, and welcome to this Monday, July 1st, 2019 Market Watchers live show with your host, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Taking a look at the action, we've got the second half of the year starting off pretty well. The Dow Jones Industrial Average currently up 132 points. The S&P 500 up 22, the NASDAQ up 90, and the Russell 2000 off its earlier highs up only about 4 points, so definitely trailing on a relative basis. 10-year Treasury yield, second half, about the same as the first half, sitting at 2.02%, remaining in this overall downtrend. Volatility index really dropping back today, though, threatening to break below 14. We've not seen that since the beginning of May, so almost 2 months since we've seen volatility down at this level if we close below 14. Technology leading to the upside along with the financials. Real estate really just continuing the slide that it saw last week, maybe the last week and a half or so. A pretty big down day so far on the real estate group. Gambling stocks, I had to chuckle a little bit. Back at the beginning of June, I wrote, "Don't gamble" on this group, and I was talking about gambling stocks, and you can see since I wrote that article, gambling stocks have been straight up one of the top performers in the month of June. Sometimes it just got to eat some little crow. Anyhow, footwear stocks trying to get above 1,600. This is a group I'm watching pretty closely. I think this, along with mobile telecommunications, they're both teetering. They've been solid performers on a relative basis, but starting to teeter a little bit. Footwear is showing some strength today. I'd like to see it close above 1,600. Railroads resuming the strength that this group has seen on a relative basis the past couple of years, having a big day today. You can see up almost 2%. Semiconductors, of course, in the news with the trade talks, the meetings in Japan over the weekend between President U.S. and China. I think the fact that they agreed not to assess any more tariffs on one another, I think that's really helped the semi group, along with the lifting of some of the restrictions on the Huawei, that company over in China. Apple, leading stock in the Dow today, up more than 2%. I think also Nike, which is helping to lead that footwear group. Nike also having a strong day in the Dow. And then finally, one of the strongest stocks in the semiconductors actually breaking out today, up nearly 5%. Infi Corp, IPHI. Nice gap up today, taking out some prior highs. All right, Erin, it is July 1st. It is the second half of the year. I wrote an article over the weekend about, some of the things I'm looking for in the second half. I think it's going to be a continuation of the first half. I think the market's going to do well. But first of all, how are you doing here on this Monday morning?
I'm doing just great. Very excited for another show and another week.
And another month and another quarter.
Exactly. Gosh, that's true. Everything ended on Friday. We did look at all those monthly charts on the DP show, and it's hard to believe we finished off June already, and now we're hopping into July, and we've got the holiday this week. So
yeah, I think Mary Ellen on Friday said that the Dow Jones was having its best quarter since, 80 years, which would have been back in the 1930s. And it just reminded me, it wasn't that long ago, I think it was the fourth quarter of 2018, that I think the Dow Jones had its worst December, because December typically is a pretty strong month, but it had its worst December since the Depression. And so we've gone from literally in 6 months from the Dow having its worst month since the Depression to having its best quarter in 80 years. Pretty amazing the way the market, how volatile it's been.
Absolutely is.
Yep. Well, we have a full schedule today. I know we got Monday setups. Everybody gets excited for that. So why don't we get things rolling?
All right. Sounds like a plan. This is a great week, even though we do have that holiday. I'll be doing a workshop on momentum indicators tomorrow. I'm very excited. The ChartWise Women Show will be premiering on Wednesday. So take a look at that. It'll be at 1:30 Pacific time on Wednesday. No Market Watchers for the holiday. Next week, we have Tony Dwyer on Tuesday, and then we have John Murphy coming in as well on July 11th. So mark your calendar. And then the following week, we're going to do something special. It's going to be called Relative Strength Week, and we'll be focusing on that the entire week. Today, However, we're going to start off after our technical news and headlines. It's Monday setups day, so we'll take a look at our previous and our new. And earnings spotlight will follow that. John Hopkins is here for that. 10 and 10 ACLS is our first symbol, and I will finish the show with the sentiment update. Let's go ahead and move on to those technical news and headlines.
All right. There were a couple economic reports out earlier today, and you can see those on your screen. But yeah, there were maybe a little bit of mixed bag. I mean, we had the June PMI manufacturing index come in ahead of expectations, as well as the June ISM manufacturing index. So those were both stronger than expected. But then another not so great report out of the home construction group, with May construction spending falling 0.8%, when the market was actually anticipating a rise of 0.1%. So that was not very good news. And the reaction in the bond market has been, I don't know, kind of like it's been recently, not a whole lot of movement to the upside. We are up 2.6 basis points, so up close to 2.03%, but the overall downtrend here that's been in play throughout most of 2019 continues. So love to see us get back up through that 20-day moving average. It's only happened on a couple of occasions, but so far that is not happening. There were no earnings reports. Of course, earnings season will begin to kick in a couple of weeks, so the earnings reports out over the next week or two are going to be a little slow. Probably won't see a whole lot, but things will be picking up. We'll be getting some of those big banks starting around the middle of the month. All right, let's just jump into a couple things going on in the market today. Apple leading the Dow to the upside. You can see we have broken to about a 7-week high on Apple. Seems to me like Apple is making a run back toward those May highs. 210 to 215 is an area that I would watch pretty closely. Talked earlier about the semiconductor group, so I thought certainly we want to take a look, see what's going on there. Ever since the gap up earlier today, we have been selling off. Not too surprising. We did get the news from the meeting over the weekend that the U.S. and China was going to hold off on any additional tariffs. I think that certainly has helped to spur semiconductors. This is one of the areas that Mary Ellen and I had mentioned on Friday would be subject to whatever happened over the weekend. Well, when they said they weren't going to have any additional tariffs and they eased some of the restrictions on Huawei, you can see semiconductor stocks really jumped on that news. But we have seen a pullback here. One of the stocks that I mentioned, IPHI, you can see is gapping up. I'm going to take this out on a relative basis a year. You can see that is a nice breakout now above the early May highs. And look where the semiconductors are versus where we were back in April. Nowhere near those highs yet. So any kind of a breakout in stocks within that group obviously would be showing some nice relative leadership. And there you have it, IPHI having very strong relative period versus its semiconductor peers. Another company I've mentioned here that's also been strengthening on a relative basis is Applied Materials. And you can see Applied Materials up a couple percent today, although it is off its earlier high. But it's broken out to highs not seen since August of last year. And on a relative basis, earlier in June, you can see we got to a 10.5-month high. So I think Applied Materials is another stock that's seeing a lot of interest as we move into the second half of the year, at least in the semi space. All right, as far as some of the industry groups go, I mentioned footwear earlier, and I wanted to just show you a little bit of what I was talking about. You can see over the course of the last 2 years, this is a chart of the footwear index divided by the S&P 500. So it's relative performance. And if I'm trying to outperform the S&P, I wanted to look into areas that are outperforming the S&P. Footwear has been one of those areas. And you can see for the most part, we had the trend rising. We had activity, the relative activity was above the 50-week moving average, and for the most part was above the 20-week moving average. I mean, it was a very, very strong part of the market. I'm a little concerned because now you can see that we're struggling. Not only did we not hold the 50-day and move below it, but you can see the relative momentum has turned negative for the first time in about a year and a half. So anytime you get the weekly PPO, that relative PPO going below the center line, it's just telling us that the momentum, the relative momentum, is beginning to turn a little bit in footwear. So in my blog article, when I mentioned a lot of industry groups, I went into the market outlook for the second half of the year. And I think I took a look at maybe about 25 or 30 industry groups. Footwear was one of them. This is an area that I think is just teetering here. I'm not quite sure what to do with it. It's been moving a little below the 50. You can see that relative PPO has turned negative. I'm not quite sure. Nike having a good day today, that could help. I want to see this move back through these moving averages and move back above the center line. And so right now, I think it's just a little bit too early to tell. The other one that I wanted to mention, also in this same kind of predicament, is the mobile telecommunications group. Very strong 2018, but we topped on a relative basis in December. We have been trending lower. Look at the relative PPO, which went negative back in April. We turned, it looked like, okay, here we come back again. Never got through that center line and rolled back over. So that is why I don't want to get too excited by Nike having a good day or a couple of good days. We need to see this really begin to turn back to the upside on the footwear group, but also here on the mobile telecommunications group. I don't really like what's going on here. We're moving to a new 2019 relative low in this group versus the S&P. I think you want to be careful if you're trading any of these mobile telecommunication stocks if they fail to hold their support level, even if they happen to be relative outperformers. If the group is going down, it's going to be very difficult to maintain that strength as we move forward. Now, a couple of areas of the market that I thought I'd mention that I think are gaining strength. One is hotels. The Dow Jones U.S. Hotel Index, which is the DJUSLG. Look at the strength here. After downtrending most of 2018 and bottoming in January of 2019, you can see now we are actually on a relative basis holding that rising 20-week moving average. We're above the 50. You can see the PPO is back above the center line. This is a group on pullbacks I think makes a lot of sense so long as we keep our stops pretty tight. Then we take a look at the broadcasting group. Another group that has been strong over the past almost a year now, but has been pulling back here on a relative basis over the last month. I think that could present some opportunities here. Let's see, maybe one more. Let's take a look at the DJ. Whoops, I wanted to do that relative to the S&P. So let's take a look at the building materials and fixtures group. Downtrending for quite a while. It is now trending above that 20. The 20 is above the 50. And look at that weekly PPO. This is telling us that more and more money is rotating into the building materials and fixtures group. And so it's a group that I certainly would want to pay some attention to. All right, it's time to take a look at the scooters. One of the scooters, I see it is not on here right now, but was on here earlier, was L Brands, LB. So I want to pull this one up and take a look at the chart. We're going to pull it up on a relative basis. I'm a little concerned about the stock, and I was having a good day, and the reason it's no longer on that scooter list is you can see it's back down near the low of the day. When I was looking at it earlier, it was well over $27 near the high of the day. I think the scooter was up, I don't know, 8 or 10 points, but it has since pulled back. The thing I'm a little concerned about, you can see that L Brands is starting to strengthen relative to its apparel retailer peers, but look at what the group is doing relative to the S&P 500. So yes, LB is showing a little bit of strength, but it's in a very, very weak part of the market. Even with today's trade discussion over the weekend and the pop that we're seeing in some of these stocks that got hit by the trade war, we're not really seeing that pop here in the apparel retailers. So LB, yes, it's rising, got a lot of overhead price resistance. I think this is a stock that even though the scooter is moving, I think you want to be careful because of the group it's in. That is your scooter mover of the day.
All right, let's go ahead and move on into our upgrades and downgrades. Let me get this going here. My bad, having a little trouble. All righty, here we go. Let's go ahead and get started. Our first one is going to be CPE, or Callon Petroleum. And I've got this up here on our ACP.
Hey, Erin, you might want to expand your screen.
Thank you.
Yeah.
How's that? A little better?
Yeah, much better.
Okay. Thank you very much. All right, so let's go ahead and start with, actually, if I cover this, I can't see what I need to see, but I'll move this here. Okay, and I need to do this because I am a member and I don't need to get all of the commercials underneath. So me go ahead and fix that too. Sorry, guys. All right, so CPE was upgraded today by Barclays from an equal weight to an overweight. And, I like the look of this cup and handle. If you wanted to get here, we could end up making a bit of a handle back here. Let me go ahead and get some annotation going on here so we can see. All right, so I would be looking at, you can see right now the support level of what was overhead resistance for this rounded bottom has been broken through today. Like to see that. You can see this is the 50-day EMA right here. And currently it is starting to get right there above it. We'd already broken above that 20-day EMA. PMO is on a buy signal and moving back in toward the 2.5 range, 2.5 plus and minus. And so I think of that as certainly something you want to see. Nice movement there. I think the upgrade is a good one on this call. And they did move their price target to about $9, which would be just about there. So that's where they're looking to see it move to the upside. I would be looking a little bit lower than that on the tops that we have back here. And you can see that's at 850. So that would be my target anyway. Next one up is EWBC. East West Bancorp was upgraded by Morgan Stanley from an equal weight to an overweight with a new target of $57. So let's go ahead and get that right up in there. Okay, that's pretty close. So this is the price target they're looking at, which is, of course, above the overhead resistance at that February top. That's really where I would be looking, and that puts you at about 55.80. Again, another nice rounded bottom coming in here. At this point, let me get this area of overhead resistance figured out. I would be going right about here. This it lines up with the bottom we had here in January. It lines up with the two bottoms back here from October and November. And it's pretty close to, like I said, this area right here with that low in April. So this is going to be the difficult area of support to beat. That's right around the $49 area. They have price target, like I said, up at $57, so a lot higher. Next one up, let's go ahead and look at Six Flags. This one was upgraded as well today. We came down here, and I suppose you could make a case for a double bottom that's forming here. But more than likely, I was looking at the double top. It pretty much executed, came down, could have gone lower, but we did see support found right here at about $48.50. The price target that we have from KeyBank is $62. So let's go ahead and mark that right about there. And we've got overhead resistance, I would say closer to $54. And then notice we do have a big gap here that we do need to cover. And I suspect that's why their price target is just above that gap and right around that overhead resistance back from February. I certainly could see a move to test that 54.50 range. PMO is turning up. OBV is going along for the ride on the move to the upside. I'd watch that volume bar. I'd like to see it compete with Fridays. All right, let's move on to some downgrades. We've got SM Energy. Barclays downgraded from equal weight to underweight. So this is certainly going to be an underperformer as far as they're concerned. And really, if you line up this with the lows we saw back in December, that really is the price target. 1333 is what that overhead resistance level is. If you lower it down just a hair, $12.89, $13 gets you to the tops that we saw last week. And I would suspect we're going to see it turn back down, although the PMO is certainly looking okay. And you can see there was obviously some interest in SM Energy. I don't know the story behind that volume bar, but I suspect there is one. At this point, though, that resistance looks like it could very well hold. And, we did get that downgrade, not into the neutral position, but into the underweight position. A lot of times these are moving neutral. However, Yum Brands is not, Longbow moved it from a neutral to an underperform. $91 is what they're looking for as far as a new price target. So they're looking for quite the decline. I think what you need to look for right here is a decline. Right here, you can see, look at the gap. It lines up with the gap. It lines up with the top we had back here in April. That's the area about 104 that would be my make or break if you're still holding on to this. But given the downgrade, given the rounded top, look at the PMO. It's just now coming in for a sell signal. I think you would probably want to be out of this one, but you can see it is in a longer term upswing if you wanted to stay in that way. But I would be out even on an intermediate term basis. You can see right now we've got a flag on SOTUS. This one was downgraded by B of A Merrill from a buy to a neutral, and they changed their target from 111, which makes sense since we're already trading above 111, and they moved it up to, let's see, 120. So this is the price target as far as they're concerned. If you want to go by the flag formation right here, and here's the flag, I would start there, move up to about here, and then there's the actual flag right in there. And if you do the measurement, we should look for a price target a lot higher, closer to the 140 range. I'm not saying that that's what's going to end up happening here, but it's something to consider. And that's all I have for the upgrades and downgrades. There are the list of symbols I went over and the ones I did not. And stick around because we're going to be right back with Monday setups for the week, and you don't want to miss that.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
All right, we are back. It is time for Monday setups. First off, we're going to look at what we had last week. And so as you can see, GGG was at 51.27 and CDNS was 71.60. So let's see how we did on those right now. I'm going to go ahead and show you those charts. And here we go. So the first one I'm going to look at is GGG. That was my pick. I got it at 51.27, so I'm actually at a little bit of a loss. Looked like it ended up pulling back, but you can see the PMO is still pretty healthy and on the rise. So if I had this, I would continue holding it because I see this ascending triangle now that's forming. I would expect the breakout to the upside, but unfortunately, Tom, it did not happen for me this week.
Well, I tell you what, though, you did have a really good one in your list last week. I don't know if you looked at them, but pull up SRPT.
Oh, that was on my list. That's right.
Yeah, check that one out.
I should have been. Oh, my goodness. Well, that was a Friday surprise, it looks like.
I'm not seeing it on your screen, though, if you could pull it up on your screen.
Oh, you're not seeing it?
There it is. There it is.
Yeah, quite.
Yeah, that was, I don't know what it was, probably 125, 130 or something, and now 156. And it's in that biotech space, and this is the time of the year for biotech, so I'm not shocked by it.
No, it's exactly. And, the thing is, when you pick a biotech, let's face it, I could be facing the same bar only in the opposite direction, the way they travel. So I think that was a great move, but.
Yeah, well, I can't give you credit for it, though. You didn't pick it.
I did not. And look at you. It would not have been the best time, but you got a nice bump this morning. So you're actually, it looks like ahead. You had it at 71.60 and it's at 73.22. So
yeah, it's doing really well. And the one I had last week, I mean, it's all about timing, really. Mm-hmm. I mean, the one last week I had was GLDD, and I literally thought about getting into it, and it took off this week. Stock's up more than 10%. So, but again, I don't get credit for it. I didn't have it this week.
Nope.
Nope.
All right, well, what do we have up for us this week? Here are the ones that I am going to be looking at. I do want to show you the summary because I always find it interesting to see what ends up coming up or what I find interesting after the fact. I ended up putting in an ETF for everybody. I thought this one looked really good. And then really a mixed bag of the sectors at this point. So, hey, take your pick of these. But let's go ahead. I'm going to start off with Akamai. And there we go. The reason I'm liking this one is simply I've got that ascending triangle going on here. So that's a pattern that I would, of course, you want to see. The upside breakout is what you're looking for. We got it already this morning. Of course, we're trading below it. PMO's been really messy, admittedly, but now we're getting that. If you look, we already know we're going to get a higher high than the previous one. Now I'll be watching to see if we can get above this other top on the PMO. But I like the look of this. We're making a pretty decent move. Like I said, you're getting that higher high. You've got a scooter that just popped into that hot zone. Volume, OBV, it's kind of neutral here, but I'd be watching to see what kind of volume we get today. Let's see, the next one I'll look at is Avnet. And I thought this one looked really good. It's just that it made quite the move this morning. So rather than pick it for my Monday setup, I did want to point it out because I think on an intermediate term basis, there's some really good potential here. And you could see the tops back here in November and February. And we have broken out above that, as well as the short-term top right back here in June. So I think this one's looking pretty good. And the next area of overhead resistance isn't till about $49. So I thought Avnet looked pretty good. Let's see, what's our next one is KKR and Company. The only thing that kept me from picking this is that it has already made quite the run, but the PMO has plenty of room to move to the upside. Again, you've got a scooter just popping into that hot zone breakout that, gets above these highs we haven't seen. It's in high territory we haven't seen since going all the way back to November. And we did beat out this area of overhead resistance as well as this one back here. So to me, the next area to look for is that top that we had back in September. So I think this one has quite a bit of room to run. So I thought that was an interesting one, since financials do seem to be getting a little more interesting, I guess. Trex was also on my list. Really nice breakout from this declining tops trend line. Popped up today, actually yesterday, Friday, it had popped above that short-term support or overhead resistance. Today, it's now traded well above that. It has fallen a bit, but look at the PMO bottom above the signal line. Like I said, a nice short-term breakout and overhead resistance. Well, I'm looking at the filling at this gap being filled. So I'm looking at 77.50 as the upside target. But let's see. Oh, and then there's Vanguard. I really like the breakout on this ETF. I thought that looked great. You've got the PMO on the buy signal. It's hanging in there relative strength-wise. And look at the OBV gently rising with price here. And that breakout, I think, is very encouraging at this point. And I think if you were to go back even on a weekly chart, I think it looks pretty good still. Yep, because you still have overhead resistance at that 2018 high. And look at that, how important breaking through the overhead resistance that it's doing right now is. That's a pretty good breakout there on the Total World Stock ETF. But the one I ended up picking was Williams Company, and nice breakout from a trading zone that we've been in. Upside potential right here at about 29.25. So I thought this one would be a really good short-term pick. PMO has just reached into the zero, above zero, and plenty of room to start rising. Look at the OBV really telling us during this period of consolidation, all those rising bottoms really was giving us a signal that we should look for that breakout. We got it today, and I think Williams Companies looks really good.
All right, so that's at 28.22 last price. All right, I am going to go with my pick of the week, L3 Technologies, which I've talked on here before. I'll get an update just to make sure I have the right price or a current price. And that is, there we go, 245.17, 245.17. There is a negative divergence. The momentum oscillator doesn't show here, but on the recent high, the PPO is a little lower. So I think this pullback here was somewhat warranted just based on the slowing momentum. But we've now pulled back from over 260 a share down to the 245 level. I think perhaps we'll get down to 240, so maybe it's just a little too early to pull the trigger, but I like it. I would actually accumulate on this for this stock down to 240. I think a close much below the 50-day, which is sitting at 238 and change, would probably get me out of the stock. So the reward to risk as it pulls back here, I think really begins to grow. I would be looking for another test at 260 and eventually breaking out. I like it because it's part of the defense group, which has been strong. Yes, recently we're seeing a little bit of relative profit taking in this stock, but it was just about a week and a half ago, we were trading at a new 52-week relative high, L3 versus its defense industry peers. And you can see all of these are lining up from left to right, strengthening. So I think anytime I get that and I get a pullback like this of about 6%, I think that's a pretty good opportunity to get in on a stock and without having to take a whole lot of risk to the downside. So LLL is my pick of the week, and here are some others that I like as well. First up is Mercado Libre. I do own this stock. Stock has pulled back to the 20-day moving average. I think this thing is going to take back off again and challenge the recent highs. Again, when you look at the relative strength, you'll see that this is a stock that has been outperforming its peers. Its peers have been outperforming the S&P 500, and I think, at least based on my work, these are the types of stocks that I want to be in. So Melly, I think, looks really good here. Harris Corp. Harris has been pulling back. Don't know why that should be okay there. Unless something happened today to the ticker. All right, I am going to skip Harris for now. Let's take a look at CCI. Crown Castle Corp. I really like this pullback to the 50-day moving average. This is a stock that was trading very strongly just about a week and a half ago. Took a little profit here. Let's pull this one up on that relative chart as well. It is breaking out in a group that has been performing pretty well. Now in June, it was a struggle for the industry group, but overall, the stock held up well versus the group. So if the group gets any kind of a bounce, I think this is a stock that's going to quickly go back to its recent highs. So I love this test, even moving below the 50-day and coming back up and holding it. If you look across here, you'll see that also was an area, a breakout around 129. So we've gone down, we've tested that, and now we're getting reversed. So I think CCI looks pretty good. Hasbro. Toys is one of the more interesting areas of the market right now because we kept looking and waiting to get through that 845 area. Toys now trading over 850, almost 860. We've gotten that breakout. On a relative basis, we're starting to see a little bit of strength after tremendous underperformance for a long time. Hasbro is one of the best stocks in the toy group, though. So if the group continues to break or move to the upside, watch for a breakout here on Hasbro. I like Hasbro going forward. Teradyne. This is another one very similar to IPHI that I mentioned earlier in the show with relative strength. Look at Teradyne relative to the semiconductors. Earlier this month, breaking out to a new 52-week high. It just needs a little bit of strength in the group, and we are getting that now. As the semiconductors move up, you can see right now Teradyne threatening a breakout above the late April, early May highs, even though the index is down considerably from there. So clearly we've got a lot of relative strength here. I think the stock's going to bust through 50, and when it does, I suspect we're going to see another big melt up here in Teradyne. Twitter, TWTR. This is just whether or not you like playing off of these recent lows. Major gap support, though, just above $34. We printed a hammer on Friday right at that level. I don't really like the relative strength and all. For me, it's just about holding this price and gap support. If it does, you can keep a fairly tight stop. If it holds here, got a lot of potential upside. So Twitter, I thought, was interesting based on how it closed last week. And then the last one I have is Align. This is probably the least favorite of what I have here, but again, another hammer, prints on Friday. Long term, this has been one of the best stocks in the medical supply area. And I'm going to pull up a longer term. Let's go weekly. And let's go and take a look at the last 5 years or so. I think what you'll see is on a relative basis, this stock, Align versus the medical supplies group, just absolutely exploded. And so pulled back in the fourth quarter of last year, is kind of sideways consolidating. But I think the long term is what I like best here about the stock. So yeah, short term, we might be having some issues, but it is a great stock for the longer term. And those are our Monday setups for this week. So Erin is going with WMB 2822 in the energy space. I'm going to stick with defense and go with L3 Technologies. 245.17 was the price for me. So we'll see how we do this week. A new week has begun.
Indeed.
All right, it is time for Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates and teaches you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins, I know you're out on the West Coast this week. How's it going out there?
Good. It's going great. I'm actually at the LAX Hilton, overlooking the runway. So just keeping an eye out for my plane.
All right. Sure. I thought maybe you were keeping an eye out for my partner. She's out there too.
Oh yeah. Oh well, that's true too.
I don't know
how far are you from the airport, Erin?
From LAX, okay. It depends on traffic, of course, but if there isn't like a lot of traffic from to LAX, about an hour and a half.
I'm about maybe 100 feet, from the runway. But I'll tell you, the traffic is something. I've spent years into the DC area, like you did, Tom.
Yep.
And that traffic was crazy. But here,
yeah,
I mean, you could be going 10 miles and it could take you an hour.
Yeah.
Yes.
It all depends on the traffic. Erin knows exactly what I'm talking about. It's brutal.
Well, the problem is too, you can't time it anymore. It'll happen just any time. So hey, check my GPS. It says I'll be here at this time, but
I got to tell you, I really like the vibe here.
Yeah,
I enjoy it.
That's because I'm here.
Exactly. I should have looked you up. Sorry. Next time, my daughter lives here, so I get out here frequently.
Let's do
Great.
it.
Well, I don't mean to break you up, but I like the vibe of earnings. And so let's get into some of these. I know you've got some stocks for us. What do you got today?
Well, I did an article this weekend. Privileged to be able to write, for ChartWatchers, and really was highlighting a couple of stocks. The whole idea, behind earnings beats is to look for companies that beat earnings expectations, top and bottom line, Tom. And better yet, if they're in good sectors, you marry them. So you marry those stocks, you take a look at the good sectors. If you have a stock in that sector, you go for it. And we have a couple of stocks that I highlighted. One is, you just pull it up and look at it, EHTH.
Oh, yeah.
It's just been a monster.
Yeah, I have to, full disclosure, actually own it. So,
okay.
This one had a great week last week. Big.
And it's having a good day today.
Yeah, nice breakout. Another good day today, up more than 2%. And I tell you what, when you look at the relative chart, and in my blog article over the weekend, yesterday, actually, I posted an unusual in terms of timing. I posted an article last night because I had written so much. It was like I wasn't sure I was going to get it out in time this morning. So it's like I'm just going to go ahead and get it out last night. But I looked at a number of different industry groups, and one of them was the life insurance group.
Mm-hmm.
And down here, life insurance making this move, trying to break out to a 52-week high. And you can also see the relative strength that's been building in this group now for the past couple of months.
Oh, yeah.
And once you find the group, I agree with you. I mean, this is a stock that has been a great performer within the life insurance area. So it went through a consolidation period for about 3 or 4 months. But once it made the price breakout and also broke to a new 52-week high on a relative basis, that is a pretty good time to maybe think about getting into a stock like this because money is starting to rotate into it again. And you can see what has happened to the stock. So this is definitely a great performer heading into the second half of the year.
Yeah, and another one that I highlighted was Enphase, the NPH. I mean, you see the similarities. Just look at this stock. Look at that volume bar back in May.
Yeah.
Just a lift off. And, pulled back once the 20-day, on its way back up today. I think if the market stays strong, this is going for the ride.
Yeah, I think this has been the best performing. When I came on and I joined you at Earnings Beats for that, the portfolios, the top 10 picks webinar back on May 19th. EMPH was one of the stocks mentioned. Back then it was 14 and change. I want to say like 1460 or something like that.
Yep.
That was a little over a month and maybe 5-6 weeks ago.
Mm-hmm.
And now it's at 1854. I mean, when you see these stocks make breakouts and they're part of groups that are very strong relative to the S&P 500, they tend to take off. Now, I will say I didn't own this one at any point during this period, unfortunately, but it has been the best performer within that aggressive portfolio that we had discussed back on May 19th. This has been a crazy stock, and in a group, this has been the best stock or best industry group in the market during 2019. You can see that the renewable energy space was down here around 65, and now we're at 115. That's getting close to a double. We're not too far from having a double on the renewable energy space in the first 6 months of the year.
Yeah. Anyways, those are the two I featured, and a couple of other stocks to go over quickly.
Yep.
This is one that will demonstrate sort of a combination, looking for strong chart, being patient, and riding it. And this is Omnicom, OMC, and this.
There you go. I think we're losing you, John. I don't know. We may have lost you. But I'll go ahead and go through the stock. I mean, I'm very familiar with this one as well. Another one. Actually, I think
Hey, Tom.
Yeah, I think your sound is really off unless it's on my end.
Okay.
Not sure which end it's on, to be honest. But I wasn't catching much of that. But here on OMC, essentially today we're putting in the right side of the cup. I couldn't hear anything you said about OMC, John.
Okay.
But there was a big move up. We pulled back. This is the gap support zone right in here. So when you said you were patient, I'm assuming throughout this period is what you were talking about, because this is a stock that really never violated any major support level. Some might look at it and say, well, it was below the 50-day. But for me, my primary is price gap support, where I can identify to the penny exactly what a key level is. And here, I think OMC went down, held this gap support, and took back off. I think this is now a nice looking cup off of an uptrend. And I suspect after maybe a little bit of, maybe we'll see a base form since we're right here at a major resistance level. But after that, I see this stock going higher, and a measurement on a breakout would be to about $90.
Okay.
Was that what you were referring to in terms of patience down here?
Yeah, we got involved right back there where your arrow is.
Okay.
And we had a price target, near 84. You can see that last high.
Mm-hmm.
And we got to 83, almost 83.20 today. Said, you know what? Within 1% of our target, I've got a rule. You get within 1%, the reward to risk can start going down. This could go higher, but we set our target, back a month ago. We're going to live by it.
Yeah, the high, well, I look at opens and closes. Any intraday movement, a lot of times it can be manipulation, market makers. I like to know where stocks open and close. And this stock OMC opened, its high among its opens and closes was on April 18th when it opened at 83.21. So to me, that is the major resistance level, not necessarily the intraday high. That's just the way I look at it. But 83.21, today's high, 83.19, got within 2 cents.
That's where we got out
of that level. So yeah, absolutely. I think that's a great exit point. I think, somebody who exited there might be able to get this stock on a pullback to the 20-day moving average. We could say a handle that moves back, tests that 20-day before a breakout. So I think that was a great trade.
All right. And the last stock was Lululemon.
Okay.
We got involved in this stock last week. got right down, to the 50-day.
Uh-huh.
So let's get involved. And if we had a second entry in case it pulled back further.
Yep.
And, it's sort of struggling a little bit here with the market taking off. But so far, it's, performing for us.
Yeah, I was just looking back. I mean, we had a big gap up back on June from 170. The black candle means that it's filled. Anytime you have a filled candle, you're opening at the top and closing at the bottom of that rectangle. So here we opened, I don't know, probably 182 or something, came all the way back down. I view maybe 170 to 171 as a pretty key area of support on the stock. And I would watch it closely because unlike some of these other stocks that we've talked about, Lululemon has been a great relative performer versus its peers, but its peers relative to the S&P 500 have been going down. So it just tells me that, it's an area of the market that's not getting a lot of money, but of the money that's going into it, Lulu is definitely getting its fair share, which is good. But if the overall group rolls over and this stock starts to lose support, I would be out of it.
I agree with that. Yeah.
So I would just maybe watch that 170 area.
Mm-hmm. Yeah, we've got to stop there.
Yeah. Otherwise, I think this is another one that clearly is a leader in its space. And I think for me anyway, I've seen much better results in my trading when I stick with leaders. And so I've kind of adjusted things over the years.
Yeah. I'll leave you with one thought.
Okay.
Brand new trading day, new week, new month, second half of the year, starting. Perfect time to have a little discussion. So I want to let people know, we're going to have an event next Monday. And if you go to our website, earningsbeats.com, you'll see a 4th of July special. And it'll quickly tell you about the event. So anybody interested, we'd love to have you join us. So much going on. The market's been unbelievable. What's going to happen the second time of the year? We want to get people ready.
Sounds good. Yeah, that's the second half of the year. I think is going to be pretty exciting. I think, market moving to new all-time highs today. The S&P 500, I think, bodes very well for the second half of the year.
Absolutely.
I don't know. I'm not going to go out on a limb just yet, but I think we're going to have a really big second half of the year. And I think 2020 is going to be big as well.
Okay, my friend, I think I see my plane lining up on the runway, so I got to scoot.
Are they waiting for you?
I hope so.
I hope they exercise as much patience as earnings beat does.
Exactly. All right. Thanks a lot.
All right. Appreciate it. Thanks, John. And you can see the stock symbols that we talked about. I want to just use an analogy before we get into the 10 and 10. When I think about relative strength, somebody was asking me about it recently, just, here in South Carolina. I was just talking, I started mentioning relative strength, and they were like, what do you mean? They're not really technical folks. And so I said, well, think about this. I said, you're going to go out for dinner, and you're driving down the road, and you look to the left, there's a restaurant. You look to the right, and there's a restaurant. The one on the left has a packed parking lot, and the one on the right has an empty parking lot. What are some of the things you're going to think almost immediately when you see that? What do you think, Erin? I mean, if you don't know anything about the two restaurants and you see one with a packed lot and you see one that's completely empty, what are you going to think about those two restaurants?
Well, it depends on my perspective. Of course, if I'm starving, I'm probably going to go to the one that doesn't have a line.
All right. Somebody didn't give you the right cue card.
But no, obviously, as far as quality, obviously it has to be better, right? Because people are lined out the door. But
what's the market telling you?
If I'm hungry.
Yeah, I mean, seriously though, what's the market telling you, right?
Exactly. No, exactly. And the more aggressive sectors are finally starting to show a little bit of excitement now too. And the small caps, that was really what was getting me on Friday, seeing them really outperform. Not so impressive today, but still on the upside. Yeah.
Well, my whole point, I'm going to go ahead and summarize my point there on the restaurants, is that chances are word's gotten out. The one restaurant that's very busy has been a better restaurant, maybe better food, better service, whatever. Folks want to go there, maybe better pricing. I don't know. The other one, not so much. So what it's telling the other one is, hey, maybe we need to reevaluate our business model, our menu, our employees, and so forth. Same thing, when you're looking at the stocks in the market. I mean, you have two different companies, and I know, Mary Ellen and I will do this segment. We call this stock or that stock sometimes. And we look at them, and it's no different than picking a restaurant when you're going out. I mean, it's where's the market putting its money? These analysts are going out to these companies, and they're meeting with management teams, and they're going over, okay, let's talk about your business strategy. How's that new product rollout? How's that coming along? How's it faring versus your competition? They're finding out all this information, stuff that you and I don't necessarily get outside of getting it from a third party. And so then they go back to their offices and they're putting their money and their clients' money in these stocks. So the way it shows up is on the charts, just like with the restaurants, the way it shows up is in the parking lot. And I think that relative strength is probably one of the most important areas of technical analysis. And everybody at StockCharts looks at it, but there's a lot of folks out there that don't follow StockCharts that don't look at it. And those are the people that really need to learn more about relative strength. Anyway.
Totally agree.
Yeah, totally long-winded, but hopefully everybody had stick with me on that one.
All right. Well, it is time for 10 and 10. I did get our symbols in here. It's certainly, pretty much a mixed bag. Technology is, that one's always leading as far as the requests. So it's no different than most of our times together on the 10 and 10. Did end up with a corporate bond. We'll probably look at that just to mix it up. But let's go ahead and start with our first one, Excelis Technologies.
All right. Yeah, just the thought of looking at a corporate bond just made me sick to my stomach, but okay.
That's why I thought I'd give you plenty of warning.
Thank you. Appreciate that. Okay, ACLS. I'm not a fan. Again, we're talking relative strength. We're talking about the restaurant with the empty parking lot. That's ACLS. Look at the relative strength over the last 4 months. So as yes, semiconductors have been somewhat volatile. Well, they've been quite a bit volatile. But look at this stock relative to semiconductors. It doesn't matter whether semiconductors are going up or down. This has been a stock that has been underperforming. In addition, look at the volume coming in. I mean, if the relative strength didn't get you the volume, there's a lot of distribution taking place. And here in June, we can't even clear the high in the second week of June, yet semiconductors are up 150 points above where they were back then. So again, it's just kind of beating you over the head. There's a lot of distribution. There's a lot of relative weakness here. I don't like the stock, and until it begins to show something different than what it's showing right here and right now, I have no interest in the stock.
Okay. We have a tie for most popular in the chat room. One happens to be that bond ETF, but I'm going to go ahead and start you with Texas Instruments, TXN.
All right, Texas Instruments. Now, this one's been a little bit better, and I think on a relative basis, you can see in early June broke out. So when the market or when semiconductors were really taking a hit back in April and May, you look at the absolute chart and you think, well, Texas Instruments is getting hit too. But actually, it was getting hit much less. And when you look at all these hollow candles, very few red-filled candles, which tells me every time it gapped down, buyers were there. We held on to these prior lows, which the overall group did not. And so the relative strength was there. Now the stock's coming up challenging an overhead level of resistance, which I think may cause a little bit of consolidation. But I think overall, Texas Instruments looks good. If we do fail here, 20-day test is where I would be looking maybe for entry. So as far as annotating, let's just pull up a green arrow here. And I think any kind of a test down here at this 20-day moving average would be where I would be looking for entry.
All right, let's see. Next one I'm going to give you is that HYG, the corporate yield bond ETF.
All right, HYG. Well, of course, prices are going up. Yields have been coming down. So, yeah, I mean, overall, I think the strength is still here. I just don't know. And I sound like a broken record. I even sound like a broken record to myself when I talk about yields moving higher. And I actually got a comment. This would be a good time to address that because I did get a comment in our surveys. And someone made the comment that that I feel like that yields have to go higher in order for the stock market to go higher. And I just want to clarify that is not my position at all. I think yields can go down and the stock market can go higher. There has to be new money coming into both markets, though, to do that. My point is when yields are going up, it means that money is coming out of the treasury market. So not only do you get new money going into equity market, you get money rotating from bonds into the equity market. And that, if you go back and look at history, when the yield is moving higher, we get some of the biggest rallies in the stock market. So right now with the S&P 500 at an all-time high, if we see that 10-year treasury yield rising, or we see something like the HYG dropping, because this is the price, is not the yield, that, in my opinion, would add fuel to the fire in terms of a market rally, a stock market rally. So it's not that I think that yields have to go higher for the stock market to go higher. I just believe that when the yields go higher, it's more money available to go into equity. So I just wanted to clarify that. As far as the HYG goes, I mean, it's in an uptrend. I can sit here and argue and say that it shouldn't be, but it is. It's in an uptrend. And I would say the latest breakout here was right at about this 86 area. I think as long as you hold 86, I think it's fine. I mean, based on technical analysis, it's okay to be holding this. I would just be careful if it breaks down.
All right, let's see. Next one up is going to be FLIR Systems, FLIR.
All right, nice breakout, moving to a new high earlier today. If we fail to hold this breakout on the close, then I would be a little bit suspicious, but I actually think this one looks pretty good. I'm going to look at it on a relative chart, and you can see it's part of the defense group. Now, here's the thing with FLIR. I like the stock, and the breakout is great. If I got into it, I'd want to make sure that this relative strength continues, because there are other stocks in the space that I think look really good. L3 I mentioned earlier. I like that. That's my Monday setup for this week. Also, Kratos Defense, KTOS, smaller company, but it has been on fire inside the defense group. So there are other stocks I like better, but the breakout is nice. And if it continue to build on this relative strength that it's had in the last month or so, then I would be okay. As far as a price area, I'd like to see this one break back to the upside later today and finish near the high of the day. If it does, I think you could be on your way maybe to testing that high from back in the third quarter of last year, around $63. Got another one?
Yes, I'm sorry. How about Progressive Insurance, PGR?
All right, PGR. Another one, I tell you, this is, again, an area of the market that has really strengthened. So the pullback relative to the S&P, it's fine. You're going to get pullbacks from time to time, even in an uptrend. And Progressive has been pulling back a little bit as well. But I think that it is holding all key levels. I would actually be a buyer on weakness into Progressive if you like the stock. I think right here, I would watch $78. As long as it holds 78, I think you're in a range probably between about 78 and maybe 84.5. But ultimately, I'd look for a breakout here.
All right. I think we've heard of this one, but we haven't looked at it lately. How about Amazon?
Yeah, that one I've come across from time to time.
Yeah.
Amazon just bothers me a little bit in its relative strength. I mean, it hasn't hit a relative high since back in September of last year. So while the broadline retailers have certainly picked back up again, Amazon's been lagging a little bit. It's a great company. I think it'll do fine, but I would be looking elsewhere, I think, until the relative strength really begins to pick back up again. So first things first, let's see if we can get a price breakout. The early May high up around 1960, 1970 right here needs to be cleared. I do like the fact that so far it's trading above its 20, and the 20 days now back up above the 50. So we got a nice golden cross there. I think the stock looks good. I just think there are others in the space that look better.
All right. Let's see. I'm going to give you two energy stocks just because they kept coming up in some of my scans. Curious what you're thinking. Let's see. Baker Hughes would be the first one. BHGE.
Yeah, I can tell you I'm still not a fan of energy and materials overall, just because I don't think that their relative outperformance will last. What we've seen and what I'm talking about here is just this little uptick in relative strength. Well, sorry, down here. This relative uptick here over the past couple of weeks, it still is within the confines of a longer term relative downtrend. So I'm not excited until I start seeing something much more definitive. I mean, you could look back beginning of January 2019, see how we had a couple weeks of relative strength. And then this was a group that was very difficult to make money in. I mean, you had to have the best of the best, and even then might not be enough. Look at BHGE on a relative basis to its peers, 52-week high. But when you look at the stock, it's still way below the March low, or excuse me, the March high. So the problem is not the stock. The stock is one of the best performing in its group. It's about the overall group. And so it's like trying to swim upstream. I mean, it's just a difficult area to make money in. I'm going to pass because of that. What I would say is that if I was trading it and I owned it, I want to see this uptrend continue. I do not want to lose that 20-day moving average because, again, I'm in a space that's not performing well. So if I start to see technical breakdowns, I want to keep my stop in play.
Yep, I can see your point with energy. It does make sense. We're starting to come out of, it was so beat down. It's just time for it to produce a little bit here. Antero Resources, this is exploration and production, AR.
All right, now this group has been weak as well, and this stock has been incredibly weak. I mean, the only way I can make an argument for the stock is a valuation argument, and I don't know enough about the company to do that. So it's been trending down on an absolute basis. Look at its relative strength versus its peers. It's awful. And look what its peers have been doing relative to the S&P 500. It's been really bad. So even with the group finally bouncing a little bit against the S&P, this stock has not been able to bounce against the S&P. It's just been a horrible performer. I mean, there's been, time after time, where the stock is broken down, given plenty of warning signals, hasn't closed above its 50-day moving average since back in October. I just see no reason to jump in on a stock like this. So again, when I look at something like this, I don't even have to look long. When I know the market's going up to new highs and I see this pretty much across the board on my relative charts, there's just, I'm trying to outperform the S&P 500. How am I going to do that with a stock that's doing all that? So I'm not interested at this point.
Yeah, I totally get your point there. It reminds me of GE. It kept having these little spurts and it had gone down so far. We kept thinking it was going to turn back up and it didn't.
Yeah.
All righty. Next one up is BERY.
That's a plastics company.
Yes. Materials, containers and packaging.
Yeah. I mean, this is one of the best areas within materials. So if I was I'm not interested in materials and energy, but if I were, this is one of the areas within materials I think that's been pretty good. Unfortunately, Berry Plastics has been weak relative to its group. So even though you finally have a decent group in those two sectors, this stock has not been a very good performer. Now you can look at it and say, well, it's bouncing nicely. Well, the overall group's bouncing. We're really still not seeing a whole lot of relative strength. So it's bouncing because the market's bouncing. It's bouncing because its group is bouncing. But is it truly gaining on its peers? And I would say no. So a stock like this, again, if I'm in it, any kind of a breakdown, I'm out of it. I think that you're going to run into some difficulties up around 54 and change. So far, you can see that rising 20-day moving average has been holding. So right in here, we keep bouncing off of that. So right now, I'd say 51. If close below $51, I would be out of the stock. I just don't want to take any chances on an underperformer.
All right. See your point there too. Molina Healthcare, MOH.
And I think this is the last one, correct?
It is indeed the last one.
Yeah, now this one has been showing, well, the group has bounced a little bit. And if you look at Molina, it's posted a 52-week relative high earlier in June, just a month ago. So yeah, it's pulled back a little bit, but has it broken down? I'm going to say no, but I don't want it to lose 135. That was an area you can see on the rebound. Came up to actually here we went up to 135, fell. Got up to 135, fell. Got up to 135, fell. Finally broke through. Look at the volume pick up. And then we come down, we test 135. So because it has been a great performer, but the overall group hasn't been that great, I just want to make sure I keep my stop in play. So I'm going to draw a line going right across at that 135 area. I think that over the past 2 to 3 months, we've had multiple tests there. I think coming back down and closing below 135 would be more than I'd want to see. So that is where I keep my stop. I think there are other stocks better, although Molina has been one of the top healthcare providers out there. So a little bit of a mixed bag, but that's why I would keep my stop around 135.
Okay, and that does complete the 10 and 10. Here are the symbols that Tom just annotated. I will get these up in the MarketWatchers live chart list. All you have to do to get to that chart list is click on the articles tab, click on the MarketWatchers live blog, and the link to that live chart list is right there at the top. All right, we'll be right back with the final market update and the sentiment report.
Hi, I'm Julius the Campanar.
And I'm Arthur Hill,
And
and
you're
you're watching
watching
SCC TV.
All right, it is time for our final market update. Let's go ahead and look at the markets and what's been going on. We came back here on the Dow, tested yesterday's close, and now we are bouncing up off of that. Currently, the Dow is up a little over 1/4%. S&P 500 currently at 2941.76, also making a bit of a comeback here in the last 10 minutes. NASDAQ, same. New York Stock Exchange, again, seeing that decline, but now bouncing up and setting a new intraday high. S&P 400 is really stalling out right now at its intraday high. We're not seeing the action we're getting off of the larger cap indexes on the mid caps nor on the small caps. Russell 2000 is also consolidating sideways after a pretty healthy move to the upside this morning. Treasury yields are lower currently, reading at 2%. VIX, look at this drop here in the VIX. We've got a reading now at 1508. This is going to be an interesting chart for you to look at in sentiment. UUP, we're down currently 2 cents at 25.97. Gold moving mostly sideways, but up over 1/4% for GLD. USO took a hit. We were really consolidating sideways. Things looked okay. And then the bottom dropped out. Currently, USO is down over 2%. TLT bonds moving mostly sideways for the day. And if we go to our sector summary right here, we can see that technology is the leader right now, as well as the financial sector. We're starting to see a bit more healthiness coming out of the financials with a scooter of just above 75. Utilities are the laggard along with real estate. Both of these are in those defensive sectors, so they are lagging at this point. And I'm going to pass it back to you, Tom, and get ready for sentiment.
All right. I wanted to take a look at the insurance brokers. And again, maybe not only on an absolute basis, talk a little bit about that relative strength, because the insurance brokers, as you can see here, this is a 2-year chart. And for really, more than a year, we really struggled in this very narrow range between mostly 290 and 320. Had a couple of little false breakouts, upside, downside. But I think what we can see in 2019 now is a clear uptrend in terms of absolute strength. When we move to a relative chart, look at how this looks on a relative basis. So again, mostly sideways for a while, but in the last 9 months, we clearly have a relative uptrend. So not only are we seeing money rotate into it for a breakout, but we're seeing relative money pour into the insurance brokers group. So what do you do with that information? Well, you go into the scooter reports. This is one way. And under the large caps, I typed in insurance brokers, and here are 3 companies that come right up. Now, there weren't any mid-cap stocks in this group listed, but then small caps had a couple more. And I pulled up Goosehead Insurance, which has a scooter of 98.2. So clearly it's one of the best ones out there. And you can see the performance that this stock has been making. Now, when it pulled back, look at what happened. The stock pulls back, hits a 20-day moving average right at price support, puts in this long-legged doji where it went down intraday a few dollars, came all the way back up. And it has been straight up since. What a month this stock has had in June. Now, it doesn't mean I'd go chasing it here, but this is definitely a healthy stock within a healthy space, and a pullback to test the 20-day moving average is something I certainly would be looking at. Okay, Erin, final segment, sentiment. I tell you, I'm interested to see what's going on with the end of the month last month and then and end of the quarter. And with such a strong quarter, what's sentiment telling us?
All right. Yes. Yeah, it hasn't really changed much from last week. This is your decision point sentiment update for July 1st, 2019. We are going to be looking at quite a few sentiment indicators. For those of you who are a little bit more on the beginner side, sentiment measures how people are feeling about the market. If we look at the money flows, we look at how exposed the active money managers are. All of those things tell us what the pulse is, finger in the wind, I suppose. We look at the call ratio. There's the AAII name. We're going to look at the RIDEX ratio. That's where we look at the cash flow. Wall Street Sentiment Survey. Let's see what the market timers think. And then we'll finish with the VIX, which, like I said, looking at that chart that we just saw in the final market update. Can't wait to see that one. And we'll look also at gold sentiment. So I'm going to go ahead and take us right on into those charts. And here we are. So we're going to start off with the put call ratio. It is puts over calls, right? So what we're looking at is the more calls that we get, the smaller this number gets. And that means people are more bullish. Calls are your bullish call. So you're going to move all the way up here. You're going to see smaller and smaller numbers. And the more bullish people are, the more bearish that is. So that's why I've inverted my scales, because when things get overbought, you expect the market to turn down once that indicator turns down. So that's why I invert my scales. It keeps that overbought, oversold, clear in my head as to what I'm really should be expecting. So given that, what's going on with the put call ratio? Well, you can see we hit lows and then we started making our way up. Typically when we hit lows on this put call ratio, that means people are very bearish. And that, of course, again, sentiment is contrarian. So that should be good for the market. And generally it is. That's when we're going to start seeing these moves to the upside, is after people get very bearish. Well, right now, people are very bullish. We're moving these put call ratios up into overbought territory. Now, I can't say that this is a negative because they're still rising. They still look pretty strong, moving to that upside. So I'm not going to call this a bearish for the market at this point. I would say we're vulnerable to a decline at this point when I look at this put call ratio chart. So we're still rising. We have gotten higher readings than this before, but we are really in that danger zone for the put call ratio to start turning lower. And that would, of course, indicate that we should look for lower prices in the overall market. Next one up is the American Association of Individual Investors. If you go to AAII.com, you can go take that sentiment survey for free. Just go down to the bottom of their page and you can find their sentiment surveys there. At this point, we really had no change. And I actually looked this up because I couldn't believe I had the exact same readings. Well, they weren't exactly the same. Last week, it was 29.5. This week, it's 29.6. And then the bears actually was the same reading. So we haven't really changed the outlook among just individual investors. And when you look at the ratio here, and again, this is a bull-bear ratio. So the lower the number here, that means the more bearish people are. So when we get the very low readings, that's when it starts to get bullish for the market. So that's what we want to see. We're looking at about the same reading, right around 1. And that really doesn't tell us a whole lot. You can even see the fact that we've had higher readings on both sides of the equation here. And in this case, very neutral readings. So I would read these as mostly neutral for AAII. Now we're going to look at the National Association of Active Investment Managers. And this tells us of those big guys, how exposed are they to the market? Well, again, we're not seeing much change here, and these readings are pretty much middle of the road. So unfortunately, they aren't really telling us that much. I would say that since they're a little bit pulling back their exposure just a little bit, I mean, you could consider that somewhat bullish in the short term for the market, but we're really not talking about a big change in the readings. Pretty much the same, sitting at about that neutral territory. So there you are. Next one up is the Wall Street Sentiment Survey. And with the Wall Street Sentiment Survey, this is a weekly survey that is sent out to a small group, pretty much static group for the past, I think, over 20 years. We get an email as market timers, and we have to tell him, Mark Young from wallstreetsentiment.com, we tell him whether we're bullish or bearish on the upcoming week. Do we think that the market will close higher at the end of the week, or do we think it is going to close lower? Now, because this is such a short-term survey and the market timers, we do actually tend to be fairly right. If you look at a lot of these extremes on the bullish side, a lot of them do come before a rally. So typically, you know, your sentiment is opposite. If all the market timers are really bullish and there's not that many bears, then sentiment says that's bearish for the market. Well, we're seeing that sort of situation right now. We had a big pullback on the bears, certainly an increase here on the bulls. And right now, look at our ratio. It is over 2. 1 is neutral. 2, just a reading of 2, is highly bullish sentiment. And we have twice as many bulls as we do bears. So that tells you that the market, we're getting the market timers, they're feeling very bullish. And that is typically going to be bearish for the market. And, you know, because we did get this big difference in the bulls and the bears, that does make me a little suspect as to whether we're going to be correct, the market timers, because it does seem that when we sway to one side or the other, a lot of times it doesn't pan out. So I'm watching this. We've seen higher readings of bulls, but the fact that we've had such a pullback in the bears, I kind of have to look at the market timers here, and I'm going to say that this chart is somewhat bearish for the market because there is such a, you know, the balance is really set more toward a great amount of bulls. So a little long-winded for that chart, but hopefully it was clear. All right, the next one we're looking at is the RIDEX asset analysis. Love this indicator. It's one of my favorites. Carl came up with it. There is a group of funds that are now managed by Guggenheim, and it's the same funds. It's a basket, an even amount of bear index funds and equity sector funds. And then they also report their money market assets. And so by looking at the assets in these funds and whether they're increasing or decreasing, that tells us where the interest lies as far as investors with their actual money. So this isn't go take the survey and click on bullish or bearish. This is what people are actually doing with their money, at least in terms of these funds. And it's really interesting to make these comparisons. I think that it does give you some really nice inside information as to what is really going on underneath the surface. And it shouldn't be that much of a surprise. We're continuing to see less bear assets, and we're continuing to see money coming out of the money market funds, and it's going into the market, into equities. So that tells you, as far as the money goes, investors are very bullish. They're not interested in even hedging so much with those bear funds because they still continue to pull money out. And we're on the low end here as far as assets in those bear funds. So this tells me that we might be getting a bit too bullish here with the money, a lot coming out of those money markets. And like I said, we're at lows for the past 2 years. As far as the assets go in those bear funds. So I would be looking at this as bearish for the market. You've got a lot of bulls here, although we haven't reached some of the highs we've seen in the assets in the bull fund, so it could be move a bit higher. But the fact that we're just seeing continued lack of interest in the neutral vehicle of a money market as well as the hedging vehicle of a bear fund. And so seeing that go away, people are getting especially bullish. And that, of course, is bearish for the market because it's contrarian. All right, our ultra short-term indicators. This is what I've been really interested in seeing, especially when we had that move to the downside on the VIX. This is also an inverted scale because to me, overbought is very low numbers and oversold is higher numbers. And, in the very short term, I think the VIX is really good as far as the sentiment goes in the very short term. And if you combine it with your breadth numbers, I think it's extraordinarily powerful. And right now, I would say we're getting some climactic readings on breadth to the upside. And now we're starting to see today the upper Bollinger Band breaking. And typically once we get that break in the upper Bollinger Band, that's usually when we see the typical pullback. And, with a great market day like today, the VIX has now moved way up to lower and lower numbers. And currently we're seeing a reading, it looks like, of 14.48 as far as this chart goes. And it's updating. But this, when you see these high numbers on the upside, this is the advances minus declines of the market, the breadth of the market, how many were up versus down. And as you can see, we're getting very high readings here. So I'm looking at this as buying exhaustion. We're getting really nice move to the upside, followed by it today. Somebody asked in the chat room whether I would be in for the SPY right now. And to me, I would say no. I think this is great. We're getting those all-time highs again. But with that gap up and looking at these breadth numbers and the VIX being where it is, I would start looking for a pullback, possibly this being an island formation and that gap getting covered back up rather quickly. But I'm not looking for, a big correction or anything like that. It's just this was a pretty powerful rally and it's time for a little bit of a pullback. And I think that these extreme or climactic numbers on breadth and the VIX here moving penetrating the upper Bollinger Band, that's telling me in the short term after today, we probably in the next day or two need to be a little bit, cautious as far as very short-term investments go. All right, we're going to switch gears here and look at gold sentiment. And the way we measure our gold sentiment is we take the premium and discounts for the Sprott Physical Gold Trust. So, there's a static amount of, assets in the Physical Gold Trust. And based on what people pay for the shares, that really gives you an idea of whether it's selling at a discount or a premium based on the assets that are currently in that fund. So following that is very helpful because typically the really high discounts, that means that people are very bearish on gold. And so you get those high bearish discounts, and typically that's going to precede a rally. Here's another example. The only problem is you can't really just use this straight up as a signal because, as you can see here, we had really high discounts persisting for quite some time. I think it's very interesting now that we're getting down to some discount levels we haven't seen for quite a while, at least since April, getting lows there. So people are getting more bullish on gold. And of course, that is causing that sentiment. We're starting to see that move back down after that big move to the upside for gold. This is GLD right here that we're looking at, pulling back now to that gap support area. The PMO is topping. I mean, there is a lot going on in this gold chart to tell you to expect a possible gap closure. And I could certainly see that, but I just don't see it moving back below. I think it needs to pull back and get a rest after this really nice rally, but I still think it's going to be a good place to be. but we need to get these indicators out of that overbought territory. All right, and that completes my sentiment update. Let's go ahead and just look at a summary of all of what we went through. I'll have these charts in the MarketWatchers Live recap tonight if you want to look at them more closely. But this is what I'm seeing as far as these particular indicators go and what it means for the market. But I think the interesting part now is my sentiment tally. And if you look at all of these charts, I would say that we're looking bearish coming up in the short term, coming up for the week, more than likely. We're having a great move to the upside right now, but I'm expecting to see a pullback.
Okay. Yeah, I mean, there are definitely some mixed signals in there for sure. And for those, I guess, who think the market's going to go straight up, and I'm not one of those. I do think the market's going a lot higher, but I'd noticed a couple questions in the room. One was about black candles today. I definitely see that. I'm also seeing shooting stars.
Mm-hmm.
I will caution you, we do have 2.5 hours left. I mean, if we strengthen again in the afternoon, I think that would be a very, very bullish short-term development, but we do have to wait and see how we finish today. But yeah, if we finish the way we are right now, I mean, I think that the market is suggesting that in the short term we would pull back. I don't know if we'd get a gap fill or what, but I'd be looking probably on, say, the S&P 500, maybe at the rising 20-day moving average, which currently is down at 29.06. That would be a couple percent below where we are right now.
Mm-hmm.
But yeah, I'm not looking for anything big either. I think the market is trying to move higher. This is the time of the month, first couple of days of the month, where the market does tend to do well. Not a guarantee, just historical tendency. And we'll see, whether or not we rally in the afternoon and whether we build on these gains later in the week. But got a good start to the week for sure.
Yep. Ooh, Canadian market's taking a big jump right now.
Yeah. I'll admit I don't watch it that closely, but maybe we could get Mr. Schnell on the line in the next 30 seconds. He'd give us a little insight.
An update.
Right? Yeah, so I know we got that poll. Maybe what we could do is go ahead and take a look at the poll. We had my 2 Monday setups, your 2 Monday setups, and then also from the producer, we got a couple of picks as well, and wanted everybody to vote to see what they liked. I'm surprised at the results here. I expected that Shopify was going to be number one.
Mm-hmm.
Just because it's been such a huge winner, the momentum, software, it's grabbed some headlines. I mean, that thing has been a major mover. There's no doubt about it. I mean, it was what, 220 back at the end of April, or close to the end of April, and it went up to 340 in June in about 7 weeks.
Right.
So, I mean, it's been a fast stock, and I own it right now. And so I thought maybe there might be a little bit more trading interest in that one. But so far, L3, LLL.
Right, which just FYI is now LHX, if people are looking for it, because I know they've switched with that merger.
Yeah, I was looking at that. I didn't. I didn't realize that was occurring today. Kind of surprising, actually. But yeah, LLL, which is LHX, which is the combination of L3 and Harris.
Let's see, producers picked RST and Shop. Of course, I'm pulling up the rear, which I usually do, but it is always it is satisfying when I come up on the positive side of things anyway every week. But yeah, I'm still feeling really good about WMB. I think that one looks great.
Yeah, I actually liked your AVT better personally, and that's just because I'm not a big energy fan. So I don't like every time we get a little bit of a rally, it seems like they roll back over. So I'm a little more nervous about that. I'd keep a stop in. But AVT is in the technology area and did break out on Friday, increasing volume. And I thought that one looked better than deserving to be on the bottom of the list. But I think sometimes if companies, people aren't aware of them, I think
right.
Vote on them. But anyway, we got to get rolling here. I do want to thank everybody for being with us today. Please remember to complete the survey as you exit. It's located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we will see you back here tomorrow. Happy trading.